Good morning, traders. It's Wednesday, January 16th. Taking a look at the charts. Yesterday, I pointed out in the afternoon that the markets were starting to turn green based on our trending, our short-term 30-minute chart trend analysis. Now, when the bars are red, we're in a downtrend. When the bars are orange, we're neutral. And when the bars are in a turn green, it means we are in a short-term technical uptrend. So we've gone from a downtrend to neutral a couple days ago. Yesterday, we popped into green territory, meaning the technicals and the momentum are shifting to the upside. Now, in the grand scheme of things, if we might see a little bit of a pop and a squeeze here as we see some short covering potentially kick in, and then followed by a little bout of selling, a pullback. This is kind of what normally happens during a trend reversal. We'll see how things hold up over the next couple sessions here. We are coming into the 50-day moving average. It has been acted as significant resistance in the past. When price broke the 50-day, that's when the real big downtrend really took hold and has been in place ever since. So we're still flirting with some pretty long-term resistance areas. The market's overbought to the upside. I think we're going to see some increased volatility, which usually means we'll see some type of pop and drop in the market and see some type of consolidation potentially back down to the 20-day moving average as it'll slowly work its way higher. But overall, the market is changing its bias from this downward bias to an upward, and we just need for it to build a base and for it to really continue to extend from this point going forward. Now, if we take a look over at the pre-market charts, yesterday we had a spike in the morning. Pointed out in the video, we have our three target levels. More or less yesterday morning, the market opened, popped and rallied and filled 100%, reaching all spike levels. Ended up closing very strong on the session. Had a little afternoon bout of selling, which just brought it back down into support. And then it ended up having a strong recovery to close up near the highs of the day. So overall, still very strong market at this point, but we are starting to see some distribution selling. We saw a bout of selling, but it was quickly bought back up. So there's a battle between the bulls and the bears as we get up into this overbought kind of resistance area. Today, there's a little spike in the market already. Pretty much we've seen it. It's already come up, hit the first target based on our little spike trading robot here. We've got the spike. It's already kind of caught that quick little move. We might still see the market drift up to the upper end of that, but on a trading standpoint, it's a very small spike. And really it just got hit the first target, and now more or less it's neutral. But we do still have potential here for it to continue to push up, and we might see a pop, a short squeeze potentially this week in the market, followed by a larger swing to the downside to kind of cleanse and get down to this 20-day moving average, the longer term moving average down in these levels here. Let's just jump over to Let's go over to bonds real quick. Bonds continue to they're starting to pick up speed to the downside, starting to break down this morning, testing these lows. It's recovered a little bit, but overall it's below the 5-day, below the 20-day. And if the market is rotating to the upside, the equities market, that means money's got to come from somewhere. We'll see it probably come out of these safe havens, and we could see bonds extend to the downside and potentially come down to this 50-day moving average, which will work its way up. So somewhere around this 143 area potential downside, which is through the heart of this consolidation as well. It'll act as support. So looking for a little weakness in bonds if the equities markets will end up holding higher. Taking a look at the US dollar index, let's just focus on the daily chart here. Overall, you can see it's started to roll over. We've had a bounce to the upside, a sell-off, another bounce to the upside to the 20-day. Yesterday it pulled back. Today we're set to see the dollar push a little bit higher, not above yesterday's highs, but the 20-day moving averages will continue to move down. Overall, the bias here, short term for the dollar, is actually is down. And obviously, if this sells back down and makes a lower low, we're going to see commodities start to push higher. And if we take a look at commodities, gold, silver, both consolidating in a bullish formation. They're nice bullish pennant formation, looking ready to pop at any point here. Take another run at this 1300 area, potentially break through that, which will be a pretty bullish sign for the market. If we look at silver, same type of thing. It's got a bull flag forming. sloping down a little bit, but still overall bullish formation, looking like it's just waiting for the dollar to roll over. And I think we could see money move back into silver. Silver's got a lot of upside potential here. This pattern has, if we just grab a Fibonacci extension on here, we can see where the upward momentum will go. We'll do some conservative pricing from there to here down to this area. We're looking at silver potentially having a run all the way up to 1617 or 1657. That would be the next momentum wave based on this thrust and this pause. If obviously it continues to pull back more, those targets will come down with that price as well. But we're still looking at 16 in mid 16 area for silver to pop and run. And if we zoom back in time, we can see where that area is. You can see this level is right through the heart of all of this consolidation, through this big, huge whipsaw. So that's going to be naturally, not only is it a momentum thrust into there, but it also coincides perfectly with this huge multi-month consolidation before silver broke down. So that's what we're looking at as a potential impulse pop to the upside for precious metals. Looking over at gold miners, they're obviously a little more volatile than the physical bullions themselves. Overall, pulling back to the 20-day moving average looks fairly measured. We got a big down bar, couple side steps, another down bar, about the equal length. To me, we are into short-term support. We're into the 20-day, and we could see this find some traction. We really do need to see it find traction here for it to be bullish for the commodities themselves. We want to see it start to bounce, consolidate. Overall, if this is a support level, we should start to see this move up into the low 30s after this pullback here. Looking over at natural gas, up 3%. In pre-market trading this morning, it's pulled back to about the 5-day moving average. It's having a nice bounce and pop. Overall, looking for it to do is some type of consolidation, which it's doing a little more volatile of one, something like this, where we had a big pop originally, followed by a couple day consolidation, and then it was followed by a big explosive pop. And here we've got this pop. We're getting a little larger consolidation here, some pretty big price swings, about a 5 or 6% price swing, and then we could potentially see this continue to pop up into this 420 area, which is kind of our upside target for natural gas. We're looking, hopefully we'll see it continue to consolidate here, but overall looks like it's primed and ready at this point with some high momentum to potentially continue on right up to this 420 area. Looking at crude oil, down 1%. Again, commodities more or less pulling back and flagging with the dollar having some strength. When the dollar rolls over, it could help the commodities in crude oil. Crude oil stuck under this 50-day moving average, stuck under this previous consolidation. And we have a couple levels of resistance up here, but overall this pattern here showing that it's still looking bullish. It hasn't broken out yet, but looks primed and ready for continuation move to the upside. We have seen good buying volume, and volume is continuing to hold up fairly high as it kind of churns here at resistance. There's an equal amount of people selling as there are buying, and we'll see if it can eat through this level and pop and extend up into the mid or upper 50s here going forward. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.